Dan, how many units do you have right now?
We own 620 units.
Yeah, and that's not an easy if nobody knows or hasn't tried to build a portfolio, like there is so much blood that goes into that. Like how I don't even think I've ever asked you this. I think you're on the podcast, but how'd you start?
How did I start?
Yeah.
I was in sales for about 13 years at the time, and I was good at sales. I was always one of the best reps. And you get cocky after a while. They start messing with your money, and you're like, I'll go show you. So I started trading options, and I sucked at that. I'm too emotional.
Yeah.
Did that for 2 years, broke even. And I was like, yeah, I'll try this real estate thing. So my goal was to flip a couple houses a year. So I started that. I bought my first foreclosure in 2013, almost walked away from it and lost $5,000 hand money. And who knows, I may never try it again. But I went through with it, made 27 grand on the first one. I was like, I'm gonna do this. I'm gonna flip two houses a year, make some extra money. And then I started buying some stuff that wasn't really good for flipping. So I kept them as rentals and they cash flowed. And then I started to spreadsheet that. And I'm like, man, this is real wealth here.
Yeah.
So that's what got me into the rentals. And it took me 5 years as a side hustle to build up to 30 units.
Yeah. And how, if somebody wanted, because, okay, so background, people that are in here are mostly active income. They've got W-2, they wholesale, they flip, they whatever, they make money. And some of them have some portfolios, but you
Active
know,
income in real estate or also have a day
both,
job.
both day job and
Perfect.
real estate.
Good.
How'd you go about scaling? I don't know, 15, like that's hard, really
Oh,
hard.
yeah. Honestly, that was when I hired property management
Yeah.
and then I kept buying. But once I got to 30, I'm like, man, I don't like having someone else manage my stuff. I'm a little bit of an operator and a control freak. So yes, it is tough after 15 for sure, especially scatter site. If it's all one building, that's not hard at all. It's
Yeah.
not. So I wish people would say, hey, I'll buy a 15 unit building versus 15 scatter site. Like those big 15 unit buildings sound scary, but they're
Yeah.
way easier to manage. So how did I get started? You have to have operations in mind. My new saying is it's easy to buy real estate, just like it's easy to get a girl pregnant, right? It's hard to be a good dad and raise a kid. And that's what operations is. Everyone focuses on the conception of the real estate, but ultimately where you make your wealth is the operation side of things. So how do you get started? You got to make offers, and you're in the right group for that because Travis is an action taker. JP, I know you're an action taker. That's what it's all about. You have to make so many offers and get turned down and you learn what works. But ultimately, you have to make offers that not win you the business or win you that deal. You have to make offers that if you got it, the deal is going to make you money. And that's the most important thing.
Yeah. And as far as financing, like getting, I don't know, I know Irby's buying, I don't know, 8 houses a month right now. But, at some point, like, how does financing look? Like, I don't know at what point, 20 units maybe if you're buying singles. Are you going to private lenders? Are you getting hard money and refi at banks? Do you have bank relationships already in place?
Great question. So if you have active income, let's just talk to the W-2 people. Because I honestly, my story, like I had good at W-2 income. My wife made good W-2 income. So the banks loved us, man. We would, we had whatever,
Yeah.
$400,000 a year in W-2 income. They all wanted to give us money. So if you have active income, hold on to that as long as you can and build up a little bit of a portfolio to get you those relationships with the banks. And then make sure if you quit your career, like the hack is quit at the end of the year. So you can ride that W-2 for a whole year so that your bank friends can use that tax return in W-2 for a whole year while you get yourself going. I quit at the end of 2018. I rode those tax returns to load up. I went from 30 units to 50 some units that year. And the following year, I went to 80
Yeah,
units.
so
But
sad.
so, long story short, be strategic with your income if you're planning on making that transition out. So, utilize those to get good bank relationships. If you're active income, self employed, a little bit of a different strategy. You may have to use some more private money. And at the end of the day, like private money is easy to find if you've done. I find the magic number is 3 deals. Like I felt like after I did 3 deals, people are like, how can I team up with you.
Yeah.
Travis, I know you've raised a lot of money. I know Alex Corona, he had so much experience in real estate. He had never a concept of asking anyone for money.
Yeah.
And that dude's an action taker. So I said, hey, go out and ask these people. He's like, they want to do business with me. I don't know how. He's like, partner. I said, forget partnership. Give him a 1-page promissory note. I gave him my promissory note, and he raised like 200 grand like that week.
Yeah.
So you got to get past those first 2 or 3 deals to where you're not a complete shit show of a risk, right? As long as you can show people that you can take a deal full cycle, and that to me is a different story, right? I'm trying to take 305 units full cycle. I'm trying to take 258 units full cycle. And that's exciting. But initially it was take a duplex that's generating $1,000 a month and make it $2,000 a month and refi out, get all your money, get your lender paid out. That's taking something full cycle. That's a good term to keep track of whenever you're talking to people that could potentially either partner with you or invest with you. If you're not comfortable asking for a loan and you don't want that holding cost, ask them to partner with you. And don't be short sighted because a lot of people say, "Oh, I don't want partners," and this. It's one deal. If you're really in the game for the long term, you ain't going to care about this one little deal. This is going to be a little deal that you'll never think of about again. You can't think stingy and say, "Oh, I don't want to give away all this equity on this one deal." You got to think, I'm building my portfolio, not just of your properties, but also your experience, so that people will throw money at you. I literally have raised over $1 million this week from
Yeah.
people, and most of it's through my social media. And they came to me. I did not go to them. They literally reached out to me because they want to work with me.
They just DM you or text you and say, "Hey, where do we put our money?"
Facebook, dude, it's
Yeah.
stupid, man. It is
Yeah.
dumb. I can't. I've raised so many millions of dollars. I shouldn't say. I don't want to sound like
Yeah.
I'm
Yeah.
not
Yeah.
Ryan Panetta or anything like that, but I've raised well over, easily over 5 million, maybe more, on literally social media, LinkedIn and Facebook primarily.
Say, and Israel said he needed to hear that to hold on to active income. Yes, he is absolutely right. So say that somebody did go raise money and now they gotta, they don't have to, you can structure it however you want, I'm sure, but what do they do then? What would they raise up? They get somebody has probably starting out a little track record. We got 20 or 50 G's or whatever, a few people. What do they do then? I got this money.
To me, I never raised it ahead. Now I do. Now I raise because I know I'll find deals. But
Yeah.
before, I would find a deal and then go raise money.
Yeah.
And you all have a short list of people. And I can't tell you how many people that I've talked to that I know have game. And
Yeah.
they're like, I don't know anyone with money. I said, yes, you do.
Yeah.
Because I've had some people I never thought had 20, 50, $100,000 that have invested. I'm talking like the people that reach out to me now. I'm like, holy crap! I cannot
Yeah.
believe you have 100 grand to deploy. Teachers, everything. So what I do is now is I do have a CRM essentially for my potential investors, so people can sign up on my website and they get first look at all of my deals, and I will put out deals that I need funded. And I almost always fund them within minutes.
Yeah.
So again, that comes with experience, but you got to start somewhere. At least come up with a short list of 5 people that blind copy them on put a little one pager together and say, I'm looking for 100 grand on this, and this is what I'm going to pay you. And don't be cheap. Don't be short sighted. Pay good up front to get that experience and to get them used to giving you money, getting it back. And then the best thing in the world is when you give them their money back. When's the next deal? I hate lazy money. I
Yeah.
get, as soon as I send that wire back, they're like, when's the next deal? I don't want the money not earning anything. The people I just talked to today, one's a realtor, her husband's a policeman, and they're like, this money is burning a hole in my husband's pocket. He wants to buy a car. I want it earning. I said, get a high yield money market. And the banks are giving them a hard time over getting over 1%. I have 4%, but like I have to negotiate for that. And not
Yeah.
everyone's has time to spend on that. So you are an asset to potential lenders because you're going to give them a securitized piece of real estate with you as the operator, if you're good, right? And potentially whatever, double digit returns versus someone that's going to make less than 1%. It won't even take care of inflation. So you guys got to think of yourself as an asset but you also have to think long term. I just need to churn these deals so I can build my track record so that I never have to worry about being able to raise money.
I'm glad you said the short-sighted thing because, the last deal.
Everyone tries to
Yeah.
maximize that deal.
Yep. The last deal I did with you, I had another lender that was cheaper. And I was like, no, I don't really care. I'm making a lot of money. You saw the deal, like it was easy. I bought it, I sold it, like
Yep.
nothing. And I rotate lenders. I have a lot. I rotate lenders like that because I want to keep a relationship. I want them to know I'm gonna do what I
Yeah.
say. I don't give a crap if there were like I don't care about the pennies. I think a lot of people they're like, oh, what's the rate and what's the this and that? And it's like you said, you hit it spot on.
I have someone that reached out to me for a big deal. It'd be like an $800,000 deal. And I usually don't finance those, but we're raising money pretty well.
Yeah.
And she's like, what's your rate? I said 13%. And I just don't change it because I don't want to get in the game of
Yep.
having different deals for everyone else. So I might have to get more complex down the road, but that's just what it is. And she said, oh, I got 11%. I'm like, okay, what's your LTV? And it was 75. She was going to have to bring 25%. I'll fund more than that. So that out of pocket for her was a couple, she was
Yeah.
actually asked for more, but it was like a couple 100,000, more than 200,000. I'm like, well, this is a better deal for you. I don't care what the percentage is.
Yeah. JP was super curious about that. He had asked me to ask you. He's like, hey, about lending, Dan lending, this and that. And so I'm glad you brought that up. Like he saw Bronson's deal or whatever, but Bronson didn't bring a lot to the table. The deal was steep.
Mm-hmm.
And that's the
Yep.
key, right? If it's steep, you fund most of it.
What do you mean steep?
So say that like you were talking LTV. I don't know what percent. I'm sure different deals are different, how you look at them and underwrite them or whatever, who the operator is, but you're damn near do 100%, right?
Yep.
I mean,
Yeah. As long as 70% my loan to value, I want to stay
yeah,
under. And I look at comps that I know have sold, right? So many people bring me what's listed or
yeah,
what's sold 5 years ago. I'm pretty conservative on that. So
yeah,
we modeled that out at 230 and he ended up selling for 260.
yeah,
So, and that does two things. Number one, it protects our interest, right? Because if
yeah,
someone gets too deep, like that can, I let them spend that much mentally
yeah,
and then they get in a bind and they may not have the money to carry that.
yeah,
And also now he makes more money, right? Because he had to cinch down his budget. And if he does go over, then I'm protected because he has to throw in more money and he wants to
yeah,
get his capital out. So it does a lot of things to make sure that the deal goes quick and everyone gets taken care of. But yeah, I do a higher loan to value and I'm trying to raise institutional money. And sometimes that's a challenge because my borrowers are different than the first time people out there that will
yeah,
do the 25% down. Like my borrowers are doing multiple deals at one time. They could never keep 25% in every deal
yeah.
because they do have to have money. Even if I fund 100% of purchase, they still have to have money to pay the closing costs, but
Good point.
also to front the rehab, right?
Yep.
And the holding costs and everything else. So they do have skin in the game. It's just not in my bank account, which I'm comfortable with. But that allows them to do multiple deals at one time with me. And so there's a mutual benefit there.
Yeah. And Todd said 13% is better than 50. Yeah. Yeah, for sure.
In
If you
most
can keep your
cases,
money.
yes.
Yeah.
Yeah. Yeah, a couple percent.
Todd just did a big apartment deal over there in Detroit. We got people from all over in here. I want to
What,
kind of
how many units in Detroit?
It's 55 units.
That's awesome. Did you just buy it, you mean?
Yeah, we bought it just to give you round numbers. What did we buy it? Geez, it was like yesterday. 850 and sold it. We got an offer, hopefully close next week at 1.56.
That's
Not bad.
awesome.
crushed it.
Did you
Yeah.
do anything to it or you bought it below market?
We bought it below market. We very small work.
Ultimate
Fixed a
wholetail.
couple windows. Yeah.
Dude, that's awesome.
Yeah. We were planning on putting some people in some units. Like half of it's rented, but it needs a roof is the main repair that it needs.
Yeah, but you exited at what, 30 grand a unit, 32 a unit, right?
Yeah, something like that. Yeah. Yeah.
He
So
didn't put any money into it either.
so
None of my money, just my partner is the money guy.
yeah.
Like it's a 50-50 deal, but I was happy as can be at the end of the day.
Now, when you say you have a partner, you exited it though, right? You sold it.
Yes, my partner brought the money to the table. We closed on it. We own it
Got it.
right now. We are the owners. We opened up a shared LLC. I'm on it with them. I signed the closing docs and we're ready to get it wrapped up, knock on wood, on the 11th. I think it is June 11th.
To purchase it or to sell it?
To sell it. We already purchased it. Yeah.
Good,
Yeah.
good.
And
That's an awesome deal.
the
Yeah,
guy that
marked it up
bought it,
700K.
the guy that was buying it already put down non-refundable $155,000.
But
I'm
they're
pretty
getting
sure.
it at such a good price. I
Yeah, yeah.
mean,
They're gonna make it nice and they're gonna get Section 8 or some type of rents in there
yeah,
at
they'll cash flow the
1,100,
crap out of that.
1,200. Yeah. And they're gonna refinance it. It'll be a $3.5, $4 million building.
But think about that. Like, what's your experience before that, Todd?
A wholesaler, flipper, hotel, and wholesale apartments, nothing, no buying. I've owned like 30 properties probably at one time. Do not own any right now. Kind of had a breakup with a partner.
I understand that. But you had experience. At the end of the day, this wasn't necessarily what you would say your sweet spot was, right?
No, without this partner, it would have been tough because he bought many apartments and hotels and things like that. We
Yeah.
did a phase 1 inspection when we bought it, a phase 2 inspection. We had all that ready. I wouldn't have known anything. I would have been wholesaling it like I was wholesaling a house.
But this is why you guys need to get through these deals and not worry about maximizing each deal, right? You have to think long term because I just bought 9 units. We bought it for 790,000 in November. And I knew because you could see my 50 unit. So I knew it could rent for the rents were about 700, 750 a unit. Really nice townhouse style units as an 82-year-old woman. I bought it through a wholesaler. I found it on Facebook. I messaged him, said, dude, I got 120 units in this area. I am your buyer. And I negotiated to where I got last right of refusal on it. He wasn't showing anyone else. So I bought that 9 unit and now the rents are $1,600 to $1,800 within months, right? So this will be by the end of the year worth 1.5, 1.6 million. I've had to do a lot more in Todd's deals better than mine. But I did it with zero money in the deal. Actually, I paid myself an acquisition fee, but I got two investors to bring $250,000 in. I took a small, like 2% acquisition fee, and I'm doing all the renovations and stuff like that. So my construction company's making a small profit. We run it pretty thin over there, but we're making a small profit on the renovations. I signed for the debt and all that stuff, but you can do these deals once you have a track record. People will throw money at you because people want to own real estate, but they don't want to do the work. You know what I mean? There's many ways to skin the cat. All I'll say is just keep doing full cycle deals to get that track record built up.
Hey, Dan, what city is that your property's in or that property?
Mostly Beaver County, Pittsburgh Metro.
Cool.
Todd's already gonna be looking for apartments over there.
I'm
I know
buying.
he gonna go write it on the board behind him.
I'm buying.
You said acquisitions fee. So when you're raising money, Dan, you're setting two, was it? I thought that's pretty awesome. You get 2.5%, but you set that to the people you're raising from and you charge it to them at close.
Yeah, in this case, I had a stale LLC, so I actually wrote it into the operating agreement. So it's disclosed and everything. Always disclose. You don't want partners to think you're stealing from them, right?
Yeah.
So make sure you disclose that. I'll give you the craziest acquisition fee that I heard of, like that 258 unit deal that we bought in 2022. We bought 258 units at 18,000 a unit, which is stupid. I probably should have just sold it outright. And I probably would have made a good bit of good money there. But anyway, we bought it, we're operating it, and we're growing it. We're doing the value add. First of all, I bought it for 4.6 million. We have about $9.1 million in debt on it today. It appraised in February at 19.5 million. So we've done great things since 2022. Big numbers. I have zero money in that deal, but I paid myself $1 million acquisition fee. And I got honestly goaded by my good friend into taking that big of an acquisition fee. And I was very uncomfortable with it. I talked myself out of it 10 times because I just was like, this is egregious. But it was in the PPM, like it was disclosed. But think about that. It added 5,000 a unit. So we bought these things for $23,000 a unit instead of $18,000 a unit. And I didn't pay that and go buy a house. I didn't go buy something stupid. I literally took that cash and stabilized the first big property group that I got my balls kicked in on. So I have $1 million invested in that. I had a thing, it honestly probably saved my company because it was a tight time at that time. So I took that acquisition fee, but you can do that. You just have to understand what the total deal is. Like that cost per unit's a big thing. People talk about cap rates and everything else. At the end of the day, that cost per unit is a real metric that people look at because typically these value add projects don't make sense on a cap rate basis. So you have to default to, especially if you're wholesaling or wholetailing or whatever, you need to know that cost per unit. So I love what Todd did because that really was how he sold it. I bet the cap rate numbers did not, it would have said that deal's not even worth 700 or 800,000. So you might have said, I'm not going to buy it because it doesn't, there's the cap rate doesn't matter. And he look at what he's doing with it. So
Yeah.
cost per unit is just as important as cap rate in many of these value add deals, especially when you're wholesaling and wholetailing.
And I'm glad you said that because I get stuck on that sometimes. And it's
Yeah.
right. Yeah, I just get these look at so many deals, right? Get the blinders sometimes. So I'm glad you put that at the forefront because I put it in the back a lot.
Yep.
You're buying a ton of deals right now. Are you, I mean, you heard Dan at the time that saved his company. There's a point it gets hard. It gets real hard and then it gets harder and good and whatever. But anyways, you're buying a bunch of deals right now. Like, you got any questions for Dan? This dude's built a massive portfolio.
No, I'm just amazed somehow. I'm thinking I'm doing all these different deals and then somebody talks about multifamily. I'm like, man, I haven't even done like more than 5 units at the same time. So I just keep forgetting there's so much out there that you can do. I see somebody was doing storage units the other day. I'm like, man, I forgot about storage units. I guess I've just focused in on the single families right now, and it's I feel like I need to get uncomfortable again, where I'm like looking at other deals and looking at other metrics, like as far as measuring the deal or underwriting the deal. But yeah, I'm getting to a point too where I feel like I'm over leveraged, even though like I'm gonna get a 50% leverage. But there's gonna be a time where I'm gonna have to stop, put the brakes a little bit, and try to see if I can pay some off as well.
There's a saying that I use often, and it's something I tell myself mostly. There's a fine line between opportunity and distraction, right? When you focus on something and get really good at it, you will start to make more and more business. And Travis, obviously, both of us know Brandon Brittingham very well. He said that $1 million that you need is already in the business that you already operate, right? And I fully support that. You got to try new things, but you need to do that to figure out what your focus is going to be. And what I will say is, while I loved and I was really good at the multis and single family rentals, I hate using the term scale, but like you can't, it's very difficult to scale with that model, right? You have to do the bigger assets. And I'm having a conversation on Thursday with someone that flips land because I don't necessarily want to flip land. Maybe I will, but I want to learn how to look for land so I can buy it and build to rent. Like my next evolution is me exiting some of these, taking these big buildings full cycle and exiting them, taking the cash, and then buying land and building build to rent townhouses that are easy to rent, higher class tenant, and better appreciation in good areas. So that's my next evolution. But I wouldn't trade anything that I did in the single family and duplex arena. I needed to stabilize those smaller assets so that I didn't die when I bought the 305 unit thing. I almost died, but all of those lessons I learned on stabilizing those smaller assets helped me go after the 305. We went literally from 30 units to 600 units in 3 years. It was insane. It was hard. And the whole team needed turned over. Don't get that shiny penny syndrome. So just do what you do, follow the process, get good at what you're at, and then learn how to expand. But the bigger assets are where you can make some money. And Todd's deal is a perfect example of that. But look at how much experience he has. That wasn't like his first deal or anything like that.
Yeah.
Appreciate it.
JP, what you got?
Man, always a lot. What's up, Dan? Good to
What's
see you.
up?
Hey, so I actually do have a question just on your lending side. Where are you lending mainly? I got for example, I got a general contractor stuff. He's looking for funding on a new construction build. Are you guys doing new construction? Are you doing established properties, multifamily? Where's your lending criteria at?
Yeah, I won't get into all the particulars. I'm not doing new construction because quite frankly. It's unless it's in Pittsburgh, maybe, but I'm staying away from that because there's too much risk in the project not being ever built. I would look at new construction from a partner standpoint that's a little bit different. But from a lending standpoint, yeah, it's flips, burrs. We'll do transactional funding. If you guys are doing double closes, we'll do transactional funding at a pretty good rate. So we can fund that to give you wet funds if you need it, especially on large deals and stuff like that. That's traditionally what I'm doing. I am getting into DSCRs now. I wouldn't say that's our specialty, but that's it. I'm letting all that money go away to some other lender. So I'm going to transition to DSCR so that I can convert my hard money loans to long-term rentals. But traditionally, Pittsburgh, we need to expand, especially if I get this $15 million debt facility that I'm working on right now. I do need to expand. So reach out to me. I'd love to talk to you, especially you. I know you. Yeah, if we can do some business, I would love to put a program together for you.
Cool. Yeah, I just always wanted to hear it. I know you do so much, right? And lending is where you're leaning towards now. And I'm like, man, I have no idea what you're actually lending on. Like I see the success stories of Bronson and stuff like that. I'm like, hey, where are we at?
You don't know unless you ask, and I don't do a great job marketing. I try to put stuff out there for it. I am working with my marketing person now. We're going to start pushing out content this month to let people know. I've always shied away from it because it's very easy to find people that need money. And I was only working with about 5.5 million. Like now we're pushing 7 million at this point. So we got a little more bandwidth. And if we get this other 15 million, then we're cooking. But yeah, reach out to me, man. I'm happy to help in any way I can.
Right on. Cool. I didn't even realize I was wearing my Cleveland hat, but
Listen, Cleveland's a
right
sister
on.
city of Pittsburgh, brother. I make fun of Cleveland because why not? But in all honesty, I like the city a lot.
Before I get to Matt here, I've got to say also, if you use lenders like Dan or whoever, don't send crap deals. Like even when I send people, like I sent Bronson to Dan, but I underwrote the deal first. I even paid for inspections.